Hello and welcome to the market update for Tuesday, June the 1st. Just a quick reminder, I'm going to be traveling on Thursday, so we're going to do the stock-specific class tomorrow on Wednesday. So just make a note of that if you're wanting to attend. That class will be tomorrow, same time, same start time. And because of that, I'm not going to do a lot of individual stocks today, so that I can focus on doing something. Hopefully I have enough to do tomorrow. But anyway, that's going to be the plan. Now the trading today is going to be, we're continuing with additional candlestick formations. We're going to cover what's called the three white soldiers candlestick formation today. It's part of the training. All right, let's get started though with the market update. I have a little bit of a mixed market today with the Dow up, with the NASDAQ. The other indexes are down, and we'll take a look at those charts here in a second. The last couple trading sessions have really been bearish, but the market hasn't really dropped significantly off of that. We were dealing with kind of a seasonal bullish environment with the holiday weekend, and that might have something to do with it. And we don't have a lot of news coming out right now that can typically be a kind of a trigger for selling or buying. And so we just kind of been in this back and forth for quite a while now. And that can happen. And sometimes it seems like it's going on forever. And then it'll break. And once it breaks, you want to really pay attention to wherever that direction is, because it'll probably move in that direction for several days. So we'll see what happens. But as far as the direction alerts, I keep talking about the allergy season, but yeah, it affects me pretty bad. So if I have to pause to take drinks here, just bear with me. We're still dealing with a little bit of a kind of a tired market, where we have sentiment up here, which is above momentum, which is the red, which is above breadth, which is the green. And that's obviously that's been reflective of what's been going on with the market not really going anywhere. Momentum indicators in the buy range. Breadth, same. And this is really where it's been the last couple updates, not really changed much. And we've been kind of back and forth with the indexes. If we check on the buy-sell ratios, they're a little bit wide, but not extreme. But they are kind of moving, kind of widening out a little bit there. But you've seen a lot of the whipsawing that's gone on through here. And so, that could continue. And then the sentiment, we're getting a little bit closer to the extreme, but not quite there yet. So we're definitely not in an overbought condition yet, which is normally would be something, with the market acting the way it was, it has the last couple of days. If it were doing that in an extreme condition, extremely overbought, we'd be talking about a big correction happening on that would be imminent. But because we're not there yet, we could get these little pullbacks. We're not expecting anything big based on where we're at right now. We're not in those extreme overbought conditions. All right, let's take a look at the indexes here, or our watch list here. Switch this over to candlesticks. The S&P was very close, especially with the open, very close to breaking out to new all-time high, but it's just below an all-time high. And we did get a bearish reversal candle today so far. I mean, obviously we have still a couple hours before the market closes. So, that could change a little bit there, but that we're in an important area here, because it's if it does sell off from here, or it could sell off from here and drop, but if it does break out, it would mean that the market should continue to move higher, or it could break out and move sideways again, like it has these last couple times. It broke out, moved sideways, broke out right here, actually pulled back. But that would be more bullish if we were to break out. Now, being as close as we are to breaking out, you would expect that it will, especially since we're not in those extreme overbought conditions right now. But in the near term, with that bearish reversal candle, in the near term, I would expect that we would be lower at least for another day or two. This is a very short term. These candlestick formations are very short term in nature, but that would indicate that we probably should be pull back a little bit the next day or two. But recently, as we pointed out, some of these candlestick formations have not worked. The price action has not predicted the next day's move. We've had a lot of these whipsawing conditions where, we've had bearish reversals that have just gone, reversed right back again. So I don't have a lot of confidence in some of the things I'm seeing as far as being aggressive with my trading. And like and that it kind of lines up with what I've been talking about. With there hasn't been a lot of conviction in any direction, and so when there is, that's when I would want to pay attention, and that's when I would want to get aggressive. If we suddenly get a big breakout on high volume, or you get a big drop on higher volume, especially if there's news behind it, then that would be something I'd want to trade in that direction. So bottom line is I'm kind of in a neutral mindset right now. I'm not overly bullish or bearish. And by the way, when the market conditions are like this, a lot of times what I'll do is just focus on individual charts I'm seeing. If I see a really strong bullish chart on a stock, don't be afraid to trade it. Go trade it. You see a really bearish pattern on a stock, don't be afraid to go trade that, because those patterns should continue. The overall market may not drive those trends, but the individual stocks could continue to move in those directions. So, and in a lot of cases, when I'm in this type of environment, I'll have both bullish trades and bearish trades, just based on what the chart is showing, what the stock is showing me. And it is kind of weird, but you could have a few days in a row where your bullish trades go up and your bearish trades go down, and you're making money in both directions because the indexes aren't really driving anything yet. And so that my focus will tend to go towards just the individual stock charts. A lot of times when the indexes are moving strongly, what I want to do is align my trades with that direction, because again, when the indexes are really moving, they're going to be, there's going to be a majority of the stocks that are going to follow that direction. So if the indexes are looking really bullish, I don't want to do a lot of bearish trades, because I'm trading against that market momentum. Or if the market is dropping, I don't want to do a lot of bullish trades, because I'm trading against that market momentum. But when the indexes aren't moving strongly, then I can just focus on the individual stocks and their trends. And anyway, hopefully that makes sense. So let's move on to the Dow. Same thing, bearish reversal. Although the Dow was up a little bit, the candle is still bearish. It's dropped quite a bit from the open, where it opened, so it's showing that bearish reversal. Again, it's pretty close to its all-time high, but it's showing that bearish reversal candle. We'll see what happens in the next few days. NASDAQ 100, same thing. All the indexes opened stronger today, but then they reversed. And the Qs, they're quite a ways away from their all-time high. Same with the Russell 2000. Well, the Russell was the other index that was up, but it was, again, it's not showing a bearish reversal. It's showing indecision. That's a doji. Talked about that in the candlestick training before. But with the context of that, we were moving up before getting that doji. So, you're moving up right here. Actually, you had a bearish reversal day on Friday right here. So you're moving up, you get a bearish reversal day and a doji. It's showing just indecision. And in the context of that, that could be bearish, but that would need a little bit of confirmation. It would have to start moving lower there. But just bottom line is we're seeing weak market conditions. And so again, the reason why we go through this and then we go look at individual trades is we want to see what the market environment is before we decide if we want to do any trades or how many trades we want to get into. And with this type of condition, you don't want to be overly aggressive with bullish trades or bearish trades for that matter, but you don't want to be overly aggressive with your trades right here. All right, the bond. Let's take a look at bonds. We were looking at this last week where it looked like we were close to breaking out to a new high, but then it started to drop right here. So it looks like, but we're still in kind of this neutral environment. We're looking at these two areas right here. If we were to break below this area here, we will have gone to a lower low. That would confirm that you're likely still in that downtrend. If we were to break above this area here, you will have gone to a higher high. It could indicate a possible trend reversal. Right now we're neutral. We're kind of in the middle, in no man's land, so to speak. And so those are the two areas that we'll be looking for with bonds to see what direction that trend is going to move in. Gold is continuing to move higher. A little bit of a bearish candle today, but it's shaken some bearish candles out there. It had a bearish candle a couple of days ago and it shook it off. So we'll see if it shakes this one off. We're not in an extreme range, and I told you that when commodities start moving, particularly gold, it can stay in that overbought range for quite a bit. And so very, very strong uptrend right now on gold, and we're going to anticipate that's going to continue. So we're expecting gold to continue to go higher. Oil broke out finally. We had this. We were talking about it moving higher. It had moved up. It was kind of consolidating through here. It actually dipped a little bit lower here, but then it broke out. And it's made a nice move higher today, although, again, that's a little bit of a bearish price action where it's lower than where it opened. We'll see if that means it's going to pull back to the breakout area here. Sometimes it'll break out, then pull back to the breakout area, and then take off. But that breakout is significant. It's showing you that oil is continuing to move higher. A lot of the oil stocks are really moving today. And those uptrends should continue. The dollar is continuing to move lower. It had a little bit of a upward correction right here, where it bounced a little bit right here, but it looks like it's heading lower again. Obviously, the trend is still down. We're going to assume that trend is going to continue lower. Because it's dropped off of this is a lower high right here. That's going to be a key spot to keep an eye on. If for some reason it does rally back and move above that, that could be a early sign of a trend reversal going to a higher high. each time that happens, here was a previous lower high. Here's a lower high right here. Those areas become very significant. Same with the lower lows. Now we're down today, but we haven't gone to a lower low yet, and it has a little bit. It's higher than where it opened right here. So, if it does rally up, start rallying up in the next few days, that's going to be a key area right there. See if it breaks above there. And just because it breaks above there doesn't mean you're in a trend reversal. It's just one of the early signs of a possible trend reversal. I've talked about this a number of times. There are different clues that set up, and it just depends on how many clues that you need before you make a trade or want to make a trade. Obviously, a more aggressive approach would be as soon as it breaks to a higher high, you get in. A lot of times, I'd wait. For me, I'd like a little bit more confirmation. Plus, a lot of times you can get a little bit better entry, because if you get that higher high, a lot of times it'll pull back after that, and then you can wait to see if it gives you a higher low as well. And then you can enter, and that gives you a little bit better entry point sometimes, and a little bit more confirmation. But those are the things I would look for when looking for a trend reversal. But I don't see that yet. But I just want to point that out so that as we're following this over the next few weeks or so, we can see what direction it continues to move in. And the VIX is up today. So again, that's significant. We're seeing some of these bearish reversal signs, and we're seeing the VIX up. So there is a little bit of concern that at least that's what we're reading from the VIX from the professional traders. They're hedging a little bit today, not in a major way. It's not up a huge amount, but it had been moving lower, and it's starting to move up a little bit here. We want to pay attention to that and see if that leads to some selling over the next couple of days. So we'll keep an eye on that. All right. Let's get into some individual stocks. Like I said, I'm not going to go over too many today. In fact, some of these we've already kind of looked at before. But I want to make sure we have some to go over tomorrow, because there's only going to be one day in between the two updates. In the transportation sector here, one that I covered before was rail, 94 strength rate. Let's switch this to signals here. We've been kind of looking at this for a little while. I think I pointed out that when it was moving sideways right here, had this move down, it was moving sideways, it probably had one more move down, which it looks like it has made right here. Kind of formed a double bottom right down here. Now it's starting to move up. And this one's very close to moving to a buy signal. You can see right here, it's very close. So I would assume any additional up day would probably push that to a buy signal. Now, if it does break out, you've got a pretty distinct sideways range right here. And if it breaks out of that range, again, you can take the distance of that range and project that upward. And that gives you kind of a minimum target of where you would expect this to go after it breaks out of that range. So again, that's just a rule of thumb. Doesn't mean it has to do that, but that's one of the reasons why I like this pattern, if it can break out. And again, you could just wait for the buy signal to use as an entry. I expect a lot of the transportation stocks to continue to do well as the economy heats up. And obviously, they're going to have to move as people buying all these products that are out there with all this cheap money out there that's flying around the system. The Fed's flooding the system with money right now. It's going to, obviously, inflation's going to heat up, but there's going to be a lot of economic activity, which is by design. But there's going to be a demand to move those products around, and so a lot of these transportation stocks should do pretty well. Another transportation stock is this ESEA, 95 strength, right? Sorry. What I like about this one is, again, you got this kind of correction right into here. And it's starting to move back up. Now, I don't know if that was deep enough, for an ABC. So you have to worry a little bit that it might have a little bit deeper correction. But again, being in the same sector, and a lot of these stocks in the sector are starting to move up. So that might just be it right there. That might have been the correction, end of the correction right there. And we are waiting for it to go back to a buy signal anyway. It's getting pretty close too. So if it does have another move down where it dips down from here, maybe it dips down into here a little bit and then goes up. Hopefully it would do that before you get the buy signal, so you wouldn't be in it yet, and you can let it kind of finish its correction there. But that one looks like it could start to move up with the entire sector. In the retail sector, I pointed this one out, I think, earlier, but Jumia, JMIA, 96 strength rank. And now, again, on this one, when I pointed it out, I said this is still a key area right here. We're looking for it to break that lower high, lower low, the downtrend behavior. It's gone to a lower low right here, but this is a big bullish reversal day right here. And it's started to move up off of that. And it has gone to a buy signal today. That'll push it over. Remember, it updates overnight, so tomorrow this should move into the buy signal range, so it would confirm that buy signal. But additional confirmation would be you'd like to see it break to a higher high, and but it looks like it's coming out of that downtrend and could be starting to move up again. And if so, you got a lot of upside potential there. There's a potential that this thing could double in price from where it's at. So these are the little clues that you look for. And I always talk about this, but it's what you have to understand. How many times have you looked at a chart, a stock that's been in this big long uptrend, and you look back to where it started, and you said, why couldn't I have gotten into this stock when it started this move? How come I'm always getting in at the end of the trend? Well, a lot of times the reason for that is that by the time you can see that the uptrend is there, it's probably close to being done. You have to be able to recognize when trends are starting. And when trends are starting, they're not popular. They're not stocks that everyone's talking about and telling you should be in. And you can't look back and see that it's already moved up. And again, that's the big trick of trading, is that in hindsight, when you see it's obvious, when it's obviously in an uptrend, and you can see it's obviously in an uptrend, that's when you're getting close to that trend being done. So the key is to really recognize these little clues I'm teaching you. I don't know if this thing's going to go back up to where it was before. You can't know that. You're never going to know that. But if you can recognize the early signs of that trend developing and starting to make that move, that's what can allow you to get these big trades, to get a double on your stock trade. Now, by the way, if it does break to a higher high and it does continue to move up to this previous high up here, you also know it's not likely to go straight there. It's gonna probably stair step its way up there. So you've got to be prepared for these little pullbacks to take place. You're going to give back some of the gains that you've made as you're holding this thing for the longer term. Again, that's all part of recognizing how stocks move. If your expectation is it's going to go straight there every day, it's possible but not probable. And what can happen then is you get some down day and you're gonna bail on it because you're afraid it's going to reverse and go down, and you're not going to end up with the bigger gain because you're not understanding that stocks will stair step. They're going to pull back at times. You're going to have some down days as it's moving higher. That's one I really like, and looks like it's performing pretty well. And then lastly, another one under industrial products I've talked about the last couple updates. It was Alcoa, 93 strength rank, but it went to a buy signal today as well. But I like this little pullback right here, and we talked about this even, and I think in the last update, is either the last one or the one before. We were waiting for it to go that buy signal. It looks like it's going to trigger that buy signal today. But this one looks like it should continue that uptrend that's been in. So I like that one as well. All right. All right, let's get into the training for today. And we're going to continue to kind of focus on, let's switch this over to candlesticks here. Continue to focus on candlestick formations. And like I said, at this point, what we're getting into, what we're covering are just additional continuation or reversal patterns. And in this case, we're kind of focusing on combinations. A lot of what we've talked about in the earlier classes were individual formations, like an inside day or a harami or engulfing, bullish engulfing or bearish engulfing pattern. These are like one-day type moves, hammer formations, things like that. These next few classes, we're going to focus on just combinations, meaning multiple candles and what they could predict. Today, we're going to talk about the three white soldiers. This is a bullish formation, and I'm going to kind of draw out the context here, and then we'll look at some examples. The three white soldiers is you want to have a downward move. So we're moving lower, moving lower, moving lower, and then what you want, and it's pretty kind of self-explanatory. These are three white soldiers, meaning you want three bullish days in a row off of a bottom. So and you'd like to see, again, I'm going to cover the kind of the textbook example, but again, when you go in and look at real life examples, it just never fully matches the perfect example. You just have to, there is going to be a little bit of flexibility you're going to have with this. So you want to kind of get the main concept down, and just really understanding what's going on. Now, ideally on this, you'd like to see, first of all, you'd like to see it close near the highs of the day. If it closes right at the high of the day, that's even better. But again, in real life, you're going to have some that are going to have a little bit of a shadow or tail at the top, where it backs off a little bit from the high of the day. Ideally, you'd like to see the next day open within the body of the first day, but it doesn't have to. It could gap up or move higher the next day. But again, you'd like to see a longer day, a bigger day. And then the third day, kind of the same thing. Three white soldiers. Now, a lot of times, now this formation, you know how a lot of the single candle formations are very short term. They're indicating just a like a hammer formation. It would indicate there's a very high probability the stock moves up the next day, but it's not saying that you're starting a new uptrend or that there's going to be you're going to move up for the next week or two. Okay, this formation has a little bit of a longer time frame. It can indicate that you're starting a larger uptrend. Okay, now you have to be patient sometimes, because sometimes what will happen after you get the three big moves up, you could move sideways, or you could consolidate a little bit, or you could pull back from that move a little bit before resuming the trend. So it could pull back a little bit and then resume the trend. But the whole formation, that context is indicating that you've probably bottomed out right here, and that you're starting a nice uptrend. Very bullish conditions on that stock at that point. Okay. Now I wasn't planning on using this as an example, but we have a decent example right here on Alcoa. You have a pullback right here. You had a bullish candle, and again, you'd like to see when you say a long day, it can be, you have to look at it in in some cases with some stocks that have very small moves. This could be a really big long candle for some stocks, whereas others, you'd want to see a little bit longer. So again, how big does the day have to be? Like I said, here I'm kind of showing in a kind of a perfect example. The key is you'd like to see 3 days in a row where it's moving higher than the day before, closing higher than the day before, and near the high of the day is really ideal. And that's what you have here. It gapped up the next day. Here's where it closed. Nice big up day. Here it opened in the body of the candle. Decent up day here, closing the highs of the day. That's a good example right there of three white soldiers. And then you throw on top of that, you're getting a buy signal right here today where it's moving higher. Now again, that would be 4 straight days of moving higher. You could get a little bit of a pullback, but this is indicating that the stock should have a pretty good run. It should be starting a bigger move higher. Okay. One that I did trade recently off of this was PLTR. Had this downward move right here. Now, this didn't come off the actual low of the day. By the way, the variation of this pattern. So you have the drop. You can get the 3 white soldiers like this, or a variation of it is you get one big candle, one unusually really big candle, and that you could have looked at that right here as being that variation. You also had closing of the high of the day. Here it opened in the body right here, closed higher. Here it opened right at the previous close. It did come off the highs of the day a little bit right there. That's a pretty bullish price action after the pullback right here. It's continued to move higher off of that. Another example I saw was American Airlines. Now again, this is a little bit of a smaller body right here. It did close a little bit off the highs of the day. But again, this is where if you're expecting exactness, and I always get into trouble with this because I always have, there's always those candlestick fanatics out there that that's not what the rules are in the book, and How many times, any of you have been to college, you know exactly what I'm talking about. You remember learning about something in college and you learn the textbook of how it works in college, and then you get out in the real world, you find out that it doesn't work that way in the real world. There's variations in the real world that's kind of what's going on here, you know. And I can't emphasize this enough. The stock market is chaotic. It doesn't give you exactness, and you have to have a little bit of flexibility. Otherwise, I promise you, if you get too strict with the rules, any rules out there, you'll never find a trade. You'll never find anything that matches that. Or when you do, you'll assume that it has to work out because it finally matched all the rules that you follow. And then that'll be one time where it doesn't. The market just doesn't ever move in an exact fashion. So now I don't want to discount rules, though. I mean, I don't want to say that we're going to throw all rules out the window, but you just have to have a little bit of a balance there where you have a little bit of flexibility. But that was the first day, and then it opened a little bit higher and moved up, and then the next day it actually opened within the body there and moved higher. Both these days closed near the highs of the day. That's a pretty decent example of three white soldiers. It pulled back a little bit, which I told you can happen a lot of times, and then it continued to move higher. But this is indicating a stronger trend is about to move up. Now, you didn't have a big drop. You had this big drop, and it was kind of moving a little bit sideways here. You know, ideally, you'd like to have it drop and then get the three white soldiers right off the bottom. But like I said, that doesn't always happen. If it does, like we just saw on Alcoa, you want to pay attention to that because that's a pretty good signal there. Ford had a nice formation of this recently. Again, you had this little pullback right through here. Again, the first day was a little bit off the high of the day. Next day, it closed at the high of the day. And then the next day, it opened a little bit inside the body, closed near the high of the day. That's a pretty decent example of three white soldiers right there. Pull back a little bit. You see what it's done since then. Again, this is an indication of a bigger move, not just a short-term move. And I think that's really important because, again, very often you'll get these little pullbacks right after the three white soldiers, and it could shake you out of the trade. It could cause you to think that pattern is wrong, and you could miss the bigger move that could end up taking place. Lemonade, LMND is ticker symbol. Nice drop. This is ideal. You have the nice drop right here. Well, except for the first day, it didn't. Again, it's off the highs of the day a little bit right there. Second day, it closed at the highs of the day. Third day, it opened kind of within the body of that second day and then closed near the highs of the day. Pulled back a little bit or moved sideways actually, but then it's taken off from here. Good example of three white soldiers. Can you start to see how learning these little details are important? Like I said, we're not going to see that formation that doesn't form on every pullback when the trend starts to move up. But if it's another thing that you can recognize, another thing that you can learn, when you do see it, you recognize it almost immediately, right? You're already trained to see it. And so, and that's what happened with Alcoa there. Like I said, I wasn't planning on using Alcoa as an example, but when I pulled up the chart, not only did I see that I liked the chart, but it had three white soldiers. Definitely want to consider that as a trade when you see that type of price action. Again, the variation of this could be just one big bullish move. Alto right here. He had this drop right here, had this really big. Now, ideally, you'd like to see that close at the highs of the day on that really big move. But a really big bullish move off of a pullback right there kind of is the same thing. It's signaling that bottom is likely in. We saw that on the PLTR example. It could signal that's the bottom right there, especially if there's higher volume. You'd like to see higher volume on this too. But again, volume, you like to see at least average volume on those, especially on each of the days of the 3 white soldiers. If you can see higher volume each day, that's even better. But if you were to go higher on lighter volume each day, that would be a little bit of a negative, at least in my mind. I don't know that I would trust it as much. Now you come back here and you say, well, was this 3 white soldiers right here? Well, again, all 3 days came way off the highs of the day. Obviously, the stock still moved higher off of that, but you'd like to see close near the highs of the day. You can have one day or so where it's not quite at the high, but and that was a little bit of a small. I don't know that. If that would have closed at the high of the day and this would have closed at the high of the day and this was near the high of the day, I would have said that would work as a three white soldiers. But that was too much off the high of the day there on both those days. It wouldn't have been as strong a signal. Jotted down a few of these. I have to see Microsoft. Yeah, here's an example though of that first day. It came off the high of the day quite a bit. The next couple of days though were right at the high of the day, so that would be a little bit of an iffy. I probably would have been okay with that, just because it wasn't all 3 days that was off the high day, but these 2 days closed at the highs, near the highs of the day. This is really iffy because not only, it's almost halfway. It pulled back about halfway there. So, but you can start to see where, and again, it gets back to what I've talked about earlier as well with degrees. Could I have still traded that as a 3 white soldiers? Yes, but is it maybe a little bit of a weaker confirmation because that first day came off the highs? Yeah, I wouldn't want to get caught up in exactness, but I would also go into that trade knowing that it could fail because that didn't close near the high of the day. But in this case, it still worked. That was still a bullish behavior. This one's coming out of more of a consolidation though too. But it was still a bullish behavior, and obviously I get it that we're looking at this in hindsight. But that's how you're going to learn and recognize this pattern, and you're going to see that almost every time you see that formation, you get a bullish move off of it or continuation off of it. So look at Home Depot. Yeah, this is not a good example here because there's too much. You did have the hammer formation here. This one was off the highs of the day, and that was off the highs of the day. That's not a real good example there. I don't know why I put that one down. I think I was trying to find some Dow examples. We've been using the Dow list quite a bit. Yeah, that was not a great example either. Anyway, that gives you that. Those early ones are really good examples. American Airlines, Ford, Lemonade, PLTR was pretty good. Alcoa. So hopefully that gives you a little bit of a foundation to be able to start to recognize that. Again, the best way to learn it is to get on a watch list. You can start with the Dow list and look through that, but start looking for that. The easiest way to do it is, obviously this is going to show up at the end of a downward move. So just look at any stock that's had a downward move. You know, like I said, this isn't a great example here because these closed a little bit off the high. That's iffy. I mean, all three of them were off the highs of the day. But you can see this one didn't last much further before it pulled back. So again, that's not showing a lot of strength there. But what I would look for is any pullback, and then do you see three updates? I mean, and then then the next step is to see, do they close near the highs of the day? But that's a good way to go look for examples. But this is one, like I said, you start to combine this with our system of looking for that 98 strength rank so you're looking for the stocks in the top sectors with the highest strength rank, going from hold to buy. And if you can combine all that with some of these candlestick formations, you're going to be able to go through those lists and see which of those 98 strength rank stocks or close to 98 strength rank stocks are better than the others and have a higher probability of going up than the others. And that's when you really have a nice system. All right, that's all I have for today. Remember, if you joined late, the stock specific class is going to be tomorrow. I'm going to be traveling on Thursday, so I've got to do it tomorrow. And hopefully we have enough stocks to go over. We went through a couple today, but I purposely didn't look through all the sectors because I wanted to make sure we had some stocks for tomorrow. So hopefully we do. But we're going to do that. And then the training tomorrow is going to be kind of the opposite of what we did today. Today we did 3 white soldiers. Tomorrow we'll do the 3 black crows, which is kind of the bearish version of this. And we'll cover that in the training tomorrow. All right, thanks everyone. See you tomorrow for the stock specific class. Bye now.